Hello, and welcome to Inside CalSTRS Investments, a look at how members' contributions are invested for the benefit of California's educators. I'm here today with Stephen Tong, who's the Director of Innovation and Risk at CalSTRS. Welcome, Stephen.
Thank you.
Stephen, when you think of innovation and risk, that conjures up a lot of different ideas for different people. What does that mean for CalSTRS?
The CalSTRS portfolio is often thought of as an ocean liner, and when it needs to make a course correction, it's difficult to turn on a dime. The Innovation and Risk Unit serves two major purposes. One is to study market fundamentals and trends and provide that to the Tactical Asset Allocation Committee. And then secondly, it's to find and invest in alternative investments to help diversify the portfolio.
So then that's what we talk about when we mean balancing the portfolio?
Yes, and so when we talk about balancing the portfolio or diversifying the portfolio, there's two things that we need to do. First of all is that we need to kind of understand what our portfolio is composed of. And so we think in terms of risk factor, what's driving the returns of the portfolio. And what we're trying to understand is, are these drivers balanced through the different macroeconomic regimes? So once we have a good understanding of what's driving our returns, then we can better select other strategies now that will help diversify the portfolio.
Can you give us an example?
So when we think about diversification, we think about asset classes, and as you well know, asset classes has its ups and downs. And so diversification simply means is that when an asset class is down, we want to have another asset class that goes up. So if you imagine the two waves now sort of paired together, it's a smoother wave. And so that's what we mean by diversification, is simply having a smoother wave or smoother pattern of return. And yet our overall goal is that we want to create a portfolio that has a smoother return but achieves the 7.5%.
That makes sense. I've also heard of the example of the food pyramid to describe your work. Can you explain that a little bit?
A lot of times I think about the CalSTRS portfolio and it's very much like our human bodies. And so when we think about our human bodies, we need to eat a balanced, nutritious diet. So we want to have our fruits and vegetables, and we want to have our carbohydrates and proteins. But sometimes, we like junk food. We like to eat pizza, we like to have fried chicken, etc. If our diet consists of a lot of junk food, it's probably not healthy for us. So in the same way, when we think about the CalSTRS portfolio, what we think about is what are the drivers, what's in the portfolio currently. And we just want to make sure that it's well balanced through different macroeconomic regimes.
So how does that analogy work in an investment portfolio scenario?
So we think about a pyramid, and we want to divide that into three different parts. So at the base of the pyramid is where we think about the traditional parts of the portfolio, the core part of the portfolio. And so that consists of global equities, fixed income, real estate, inflation sensitive, and private equity. So that really anchors the portfolio. Our objective is to find other strategies, or what we call alternative strategies, that will help essentially provide a positive return when the traditional part of the portfolio is having poor performance.
Can you talk about what kind of investments those are?
We have two strategies that we're currently looking at. One is called Global Macro and the other is CTAs. Both of them fall under the umbrella of momentum or trend strategies. And so within the global macro sleeve, these are what we call discretionary managers. So the managers themselves, they make decisions based on their macroeconomic outview of the market and position the portfolio between different types of securities. With the CTA managers, these are commodity trading advisors. These managers, instead of making discretionary decisions, they use models to come up with a way of positioning the portfolio. So we think that these two strategies combined together will complement a momentum or trend following strategy.
It sounds very complex.
It is.
You've been watching Inside CalSTRS Investments, an overview of CalSTRS' diverse portfolio. Today we've been with Stephen Tong, Director of Innovation and Risk. Thanks for joining us, Stephen.
Thank you.
And thank you for watching.